Hi friends, in our earlier videos we have been doing problems on provision for bad debts and provisions for discount. In this video also we'll continue with the same concept. We'll try to learn the interplay between provision for bad debts and provision for discount. So in this problem we'll deal with both provision for bad debts and also provision for discount. Let us see, we have a problem before us. Extract of a trial balance as on 31st March 22 is given to you. Particulars: debit rupees, credit rupees. Debtors, there is a debit balance of 50 lakhs 50,000. Bad debts, there is a debit balance of 1 lakh. Discount allowed, there is a debit balance of 30,000. Provision for bad debts already given in the trial balance 2 lakhs. Now this means that in the earlier years we have set aside some profits to meet losses relating to bad debts and discounts allowed. So we already have a provision of 2 lakhs for bad debts and a provision for discount of 50,000. So these losses were expected to occur. That is why some profits have been set aside to meet these losses in the earlier years. This is an extract of a trial balance, that is why the totals are not given. Adjustments: write off further bad debts 50,000 and further discount allowed to be recorded rupees 10,000. So what the problem is asking you is, it is asking you to write off further bad debts 40,000. So apart from what is given inside the trial balance, you have to write off further bad debts of 40,000 and you are required to allow some more discount 10,000, or we can say some discount has been allowed to the customers but was not recorded in the books. So we have to record few more bad debts and some more discount in our books of account, and then you are required to maintain provision for bad debts at the rate of 5% and maintain provision for discount at the rate of 2% on debtors. Let us get into solving the problem. I'll prepare the necessary accounts. This is the profit and loss account for year ended 31st March 22. Then you have the balance sheet as on 31st March 22. Bad debts account, provision for bad debts account, discount allowed account, and then you have provision for discount allowed account. So we have opened the necessary accounts: bad debts account, provision for bad debts account, discount allowed account, provision for discount allowed account. Let us now take down the balances. Debtors is showing a balance of 50 lakhs 50,000. We will show it in the balance sheet asset side in the inner column. 50 lakhs 50,000. 50 lakhs 50,000 is the balance. Then you are given bad debts with the debit balance of 1 lakh. We have already recorded some bad debts in our books of accounts, so it is already showing a debit balance. This amount should not be again subtracted from debtors because it's already appearing in the trial balance. That means the entry for bad debts has been recorded. This 1 lakh is after subtracting from, so these debtors are after subtracting 1 lakhs. And then you have some discount allowed given in the trial balance. Discount allowed of 30,000. Let us go to the discount allowed account. I'll write here brought down 30,000. In the provision for bad debts, we already had a balance of rupees 2 lakh. From the earlier years, we have some balance. Provision for discount account, we already had a balance of 50,000. Now the question arises, what should I do with this loss of 1 lakh and this loss of 30,000? These things cannot be transferred to the P&L account because for these losses were expected and some profits have already been set aside to meet these losses. So these losses will not be transferred to P&L account. They have to be transferred to the provision for bad debts account. This discount loss has to be transferred to the provision for discount loss. Okay. So these provisions are maintained to meet these losses. So we have set aside some profits to meet these losses. Hence these cannot be transferred to the P&L account. Okay. Now let us see what we have to do further. Write off further bad debts of rupees 40,000. Now what is the entry we record for further bad debts? Bad debts account debtor to debtors. I will not write the entry, I will just show you the posting. To debtors 40,000 rupees. The entry was bad debts account debtor to debtors. For the sake of convenience, I will just jot down the entry. Bad debts account debit 40,000 to debtors. This entry we are passing now. That means both the debit impact and the credit impact has to be given now. So because of this entry, bad debts account has been debited, debtor account has to be credited. That means the balance has to be reduced. So I'll write less bad debts 40,000. Why did I not subtract the existing amount of 1 lakh? Because the entry was already recorded. This amount is after reducing this 1 lakh rupees of bad debts. Okay. Now let us see further discount allowed to be recorded. We have to allow some discount further to our customers. That means some discount was allowed but it was not recorded. Now we are recording that entry. Discount allowed account debit 10,000 to debtors 10,000. So because of this entry, there will be two impact. Discount allowed account has to be debited to debtors 10,000 and debtor account has to be credited. Debtor account shows a debit balance. If you credit the account, that means the balance has to be reduced. So to discount allowed 10,000 I am reducing from debtors. Now what is the net debtors I am getting? 50 lakhs 50,000 minus 50,000, it is 50 lakhs. So this is the amount of debtors remaining after subtracting further bad debts and further discounts to be allowed. Now we are required to maintain provision for bad debts at the rate of 5% and maintain provision for discount at the rate of 2% on debtors. Before we try to maintain the bad provisions, what we have to do is we have to debit these losses to their respective graves. Now these losses should not be debited to P&L account, they should be transferred to the provision for bad debts account. This account can be closed by crediting it. So I'll write here by PBD means provision for bad debts 1,40,000. This amount I'll transfer to the provision for bad debts account. In provision for bad debts account, I'll write two bad debts 1,40,000. So with this account will get closed. So what I've done is I have transferred this loss to the provision for bad debts account. Similarly, discount allowed account has to be closed by transferring it to provision for discount account. So I'll write here by provision for discount 40,000 rupees, and here I'll write to discount 40,000 rupees. So this loss has now been transferred to the provision for discount account. Okay. Now tell me how much is left in the provision for bad debts account. There was a balance of 2 lakh. I have used up 1,40,000. That means 60,000 remains. Here I had 50,000 rupees. Out of that I have used 40,000. So 10,000 remains. Now let us see what the problem is saying. Maintain a provision for bad debts at the rate of 5% on debtors and maintain a provision for discount at the rate of 2% on debtors. So let us do a working note now. Calculation of amount to be debited or credited to P&L to maintain provision for bad debts. So I want to know what is the amount to be debited or credited to the P&L account to maintain provision for bad debts. Now what is the debtors amount we are getting? We are having a debtors balance of 50 lakh. Now what is the total provision required to be maintained? Total provision required to be maintained it is given at the rate of 5%. That means 5% of 50 lakhs is 2,50,000. So this is the amount which I want to maintain as provision for bad debts, less already existing balance. There is some balance already existing. What is the already existing balance? I had a balance of 2 lakh. Out of that I have used up 1,40,000. Where do I get this from? If you see the provision for bad debts account, there was a credit balance of 2 lakh. I have used for 1,40,000. Already existing balance is 60,000. Now, provision required to be debited to P&L account. So this will be 2,50,000 minus 1,60,000. It will be 1,90,000 rupees. So debit. So what is entry I pass? I pass the entry P&L account debit to provision for bad debts 1,60,000. I go to the profit and loss account. I'll write here to provision for bad debts 1,60,000 rupees, and the said amount is credited to the provision for bad debts account by P&L account 1,60,000 rupees. Now what is the balance left? Carried down 3,60,000. Sorry, it's not 1,60,000, it's 1,90,000. I'm sorry. 1,90,000. 3,90,000 minus 1,40,000 is 2,50,000. Carried down, brought down 1,90,000 rupees. I think I wrote the wrong entry here. It is 1,90,000 rupees. So I corrected the entry. 1,90,000 rupees I have credited to the provision for bad debts. There's a balance of 2,50,000 left. Now provision for bad debts showing a credit balance of 2,50,000. Carried down 2,50,000, brought down 2,50,000. 3,90,000 minus 1,40,000 is 2,50,000. The said amount is brought down. So I'll write here less provision for bad debts 2,50,000 rupees. The balance amount is 47,50,000 rupees. Now we have to maintain a provision for discount as well at the rate of 2% on datas. Let us prepare that working note as well. Calculation of provision for discount to be debited or credited to P&L account for maintaining provision for discount. So what is the debtors balance now? Debtors after provision for bad debts. So out of 50 lakhs, we expect that debtors worth 2,50,000 are not going to pay the money. That means there is no point of giving any discount to these people. So out of 50 lakhs, we expect that 2,50,000 will not be collected. So balance 47,50,000 is expected to be collected. So that amount is the amount on which we may give discounts to customers. Total provision for discount required. At the rate of 2%, that will be 95,000 rupees. 2% of 47,50,000 is 95,000. So this is the amount I require totally, less already existing provision. So how much do I have already in my provision for discount? There was a credit balance of 50,000, out of which I have used up 40,000. So you can see here in the provision for discount account, there was a credit balance of 50, we have used up 40,000. So there is a balance of 10,000 left now. So the balance 85,000 should be debited to the profit and loss account. We will pass the entry P&L account debit 85,000 to provision for discount account 85,000. So P&L account will be debited and provision for discount account will be credited. So I'll write here to provision for discount. Simply I'll write a shortcut provision for discount. 85,000 rupees is debited to the P&L account and provision for discount account is credited by P&L account 85,000. So total will be 50 plus 85, 1,35,000. There is a debit of 40,000, so you will have a balance of 95,000 carried down, brought down 95,000. So there is a balance of 95,000 in the provision for discount account, which should be shown as a subtraction from debtors less provision for discount 95,000. The balance amount will be shown in the outer column of the balance sheet. 47,50,000 minus 95,000. It will be 46,55,000 rupees is the balance left now. So the net amount of debtors that is going to be shown in the balance sheet asset side is 46,50,000. So this is how you deal with both provision for bad debts and discounts when it is given in the problem. The main point you have to remember is when you are calculating the total amount of provision for discount, you have to consider the debtors after provision for bad debts. This is the main amount. You have to consider 47,50,000 and not the entire 50 lakh rupees, because out of 50 lakh we were expecting that 2,50,000 would become bad. Hence the remaining customers are the customers to whom we expect to give discount. That is why we have to take the debtors after providing for bad debts. On that 2% is 95,000, we already have 10,000, so the balance 85,000 is debited to the P&L account and transferred to provision for discount account. So this is how we deal with a problem where you are given both provision for bad debts and discount to be maintained. Thank you.